Hey, good day, traders. This is Dennis Wilborn. I want to welcome everyone to the weekend's edition of the Art and Science of Active Trend Trading Update. Just so you know where I am, I'm still in Ulsan, Korea, South Korea. We dodged a typhoon, and we were delayed a couple of days getting out of town on our way back to Hawaii, so we can dodge Hurricane Lane. But the weather should be much better. Given the basically the daily differential, because right now it's late evening or late afternoon on Saturday, and for the majority of you that will be watching this, it just in Hawaii it just turned 2300 or 11 o'clock on Friday night. Our prayers and thoughts are with our friends and family in Hawaii, hoping that they have survived the wind and rain damages that have come from Hurricane Lane. Now it has been downgraded to a tropical storm and appears to be passing to the west without any further huge amount of damage. A lot of flooding on the Big Island primarily, but on the other islands, not so bad. So let's get going. I want to remind everybody that all the materials we present are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Our motto at Active Trend Trading Course is to clarify, simplify, and multiply. I'm going to show everybody, let everybody know that I am okay. So let's see if we can pop the video setting. There we go. Hey, there we are. Okay. Just want to say, hey, aloha to everybody. Everything here is going well. And again, really thankful to our son and daughter-in-law for the hosting us that they've done now for the last couple of weeks. So we'll get more back on that in a little bit. Okay. The objective of the Art and Science of Active Trend Trading Update is to basically provide an update video to accompany the post to the website. We'll take a look at market technicians, potential bonus setups if there are any, and other market driving events, techs and look at techs and mechanical tips. Got one, a really good one for today. So see if we have any earnings situations setting up, which we didn't really. We had some good earning plays this week on BABA and a couple of others. Earning setups, if there are any bonus setups, we'll take a look at gold this afternoon. And then our tech tip today is moving averages. Which moving average is the best? We'll cover that really briefly. One of the things that really shocked me, and I think it was on Market Watch, which is a supposedly a really well thought of online presence. They're talking about how we have now moved into the longest bull market in history. And I just want to run the flag up the BS poll and say that is not true. They're citing that we've gone 9.5 years, and that's the longest in history. As you can see here, looking back over time, as I've shared this since 1926, that was prior to the Great Depression and the market crash of 1929, there have been 4 other bear markets, or bull markets, excuse me, that have lasted more than 10 years. So the one we are currently in, yes, it's pushing towards 10 years now. However, it is still going up. And matter of fact, I've talked about this particular chart several times to multiple folks and indicated that there's a grouping here. Those bull markets that are, you know, about 6.4 years and below. There's an average grouping there. And then there's a grouping of the rest of the bull markets, the other 1, 2, 3, 4, now 5 bull markets that have gone, you know, over 10 years. Matter of fact, the average of the other 4 is about 12.8 years, which that leads me to speculate that if current conditions continue to remain the same now, of course, this is an average speaking, and based on past history, is that we can expect the current bull market to probably last another, let's say 2 to 3 years to meet the average of the other other bull markets that have happened in history. Now, does it have to repeat itself? No, it does not. However, the conditions appear to be fairly ripe because even if they happen to successfully, prosecute or go against, for whatever reason, and try to impeach President Trump, which, gosh darn it, they should look at their constitution about what is, that, I hate Trump is not a reason to impeach the guy. But anyway, we'll go there. So, hey, let's take a real quick look at the number of stocks that came out on the watch list that we call the composite. What this is a watch list that compares all it pulls together entities for all 13 of the premium watch lists from IBD, and then it sorts them according to how many lists did an individual stock show up on. As we see here, Palo Alto Networks, FT&T, Team, Vive, Cyber, 5, and Paycom all showed up on 6 or more lists for the year. Then there was a break here, and then there was about 10 other entities that showed up on the on at least 4, at least 2 or more lists. And why is this important? Well, one, the thought is that if an entity shows up on more than one list, that shows that it has a higher level, a higher interest quotient, if you will. There's more people watching that stock, and therefore it opens the door up for more interest, more buying, and driving up. So let's take a real quick look at what these entities are doing for this week. And I will come back to the spies and all that kind of stuff. But let's take a look at these individual Palo Alto Networks. Are they? The question is, yes, we've just had a really good breakout. Are they in a position where they would be potentially viable? At this time, I don't know. But as we see, Palo Alto Network broke out above the 219 level. So on increasing volume, that's excellent. So this just broke out, and we can keep an eye on that going into the week. Any kind of a pullback back down here towards the 220 level might get us a setup to go into a position on Palo Alto Networks for a move back up. It's been in a really nice uptrend ever since about August of last year. And in fact, the move since August of last year has been about 78%, 78 to 80%. There we go, 78%. So I would say of the stocks, that one looks fairly good. FT&T pushing higher, needs a pullback into the moving averages to make it interesting. Not happening yet. Team, again, nice breakout, higher high. Again, it also needs a pullback into the moving averages to make it interesting. It is respecting the 8-day moving average, as you can see here on the daily chart. And so if you're wondering what this is, and we're going to be talking about this in the very near future, this dotted line is the 34 EMA. It is, I'm playing around with this to see if it contributes any to the moving average that we are looking at. We don't want to over-clutter our chart, but we'll be talking about that in upcoming training for our premium members. Vive also broke out, a huge breakout on earnings. And anytime a stock basically breaks out the way this one did on earnings, runs up, finishes at the highs after earnings, pay attention to it. Any kind of a pullback, where did it break out from? Well, it basically broke out from about $85, $86. It ran all the way up to 100. They say that there's an adage of technical analysis that if you break 100, you're probably going to 110. Let's see if we basically get some kind of a pullback midsection of this big candle right here. looks like a good place for a pullback, which would be somewhere between 95, all the way down to, I'd say about 93.50. It's got to do some pullback before we get excited. CBR, this is a newer entity. CBR, as you can see, it hasn't, it's more or less like just hasn't been out there that long. Now, this is 2015. Nice breakout here, pushing up, a large formation here. It is just pushing up towards those highs again. Needs to get up above the 75, 78 level. What can we look at happening here? This is a nice breakout on fairly good volume, so we're pushing higher. It's respecting the 8-day moving average really well. So watch for an 820 pullback or a pullback towards the 70 level. That is the breakout level, so pay attention to the 70 level. And what that may look like is that may look like 1, 2, 3 days down to approach it, and then a rebound from there. But cyber looks really strong. Paycom. Again, Paycom. Again, another one of those. Came down, hit the 8-day moving average a couple of weeks ago, rebounded, and has moved up from about 130-ish all the way up to over 150. Nice, strong move. Broke out above the, as you see, the 118.41 level, and then it basically drove sideways. And this, might as well, while we're here, let's chat about this really quickly, is see this move right here where you get this really strong move up. Let me do this. You get this really strong move up like that. Then you get more or less a horizontal move sideways. You don't get a pullback, but you get it's a sideways pullback. You just move sideways. Oftentimes that is a very strong signal. And then finally, after it digests these gains, bam, runs again really, really hard. And so that's something to be looking for. When you get a stock that rebounds after earnings, does the sideways consolidation rather than the pullback consolidation, and that often is indicative of a very strong stock to be keeping your eye on. Let's take a look at SPYs, speaking of which, to see if we want to keep our eyeball, well, of course we want to keep our eyeball on the spiders. Spiders are, they represent the S&P. What I've drawn in here is a fib retracement, and it's on a weekly chart, and it was from the highs of earlier in the year down, which we basically broke above this week. And so with the extension, what can we look at happening? Well, oftentimes there's a very high probability that prices will move on up to the 1, 2, 3, 6 extension, and or the 1618 retracement or extension, excuse me, and hit those. Now, will it go immediately up there? No, not necessarily. As you can see, over the last few weeks, this has been kind of a gradual little incline, not that much to get excited about. And so it may go up, test the 1, 2, 3, 6, pop back down to the breakout level at, 286, and then bounce from there. The other line of interest I want to draw, that I've drawn in here, is this line right here. And what this is, and I'll activate that really quick, is that is basically the depth of this flat triangle. This ascending triangle. Pull it back over to where it's breaking out at, which is let's just say about there. And over time, and you expect it to take the same amount of time that it took to get back up this high, so it started this move back on a weekly basis, all the way back here, either in, let's take a look at here, either in January, the week of February 5th, 2018, retested on 428. So it's taken everything since the 1st of February to drive up and reach this high. Could take a similar amount of time. Now, could it possibly go accelerated and go hyper extension on it? Sure, it could. But this level up here at the 320 level, that is the fulfillment of this pattern that you see right there. I'll get rid of the fibs for a second. That is the fulfillment of that. And if you're looking to trade towards that direction, again, 8-day moving average acting as or 8-week moving average working as really good support. Also, pullbacks into 820 or even the 34-day moving average EMA wise over here. And so let's take a real quick look at the Qs. Qs just following right up that 8-week moving average, continuing to move higher, higher, higher. Watch for any pullback towards this moving average, this uptrending line for a potential trigger. It has not broken out yet, but we can do the same mathematics. Now on a weekly chart, it has broken out, but on a daily chart, it's the smaller little wedge or smaller little triangle here that we're seeing depicted here on the daily chart. And so it is in gear to the upside, so pullbacks into the moving averages are game for that. What would we want to trade on that? I want to trade TQQ. There you go, bingo, bango. That's what I'd want to be trading. But again, I want to be trading TQQ where against the 820 or even down closer to the 50 or the 34-day moving average. And then last but not least, IWM. IWM did break out above the 170.20 level, so that now becomes this 170.20 level becomes a level of support. We want to see if it maintains that. If it does break down, will it hold support at the 168.90 level? What do we want to trade in respect to that? We want to trade TNA. TNA is our leveraging ETF of choice for that. Now let's take a real quick look. I've got the daily. I want to take a look. First, a good look at GC, which is the gold futures. Now, why do I want to do that? In the very near future, for premium members, I'm going to be giving a training session on our futures in your futures, talking a little bit about do you want to be trading futures? I think it's a good question. It's what I'm finding in my study of doing futures is that it's a great way to generate weekly income, and if you're trading it the right way, especially for people with smaller accounts, it can work out for you really well. Because like GC, yeah, it has almost a $4,000 margin requirement. However, you can go down to a micro gold future and trade it. It has, and I think if you're trying to learn how to trade futures, and the margin requirement on that is like less than $300 per contract. So what do we see from gold shaping up here? Weekly chart. What happened? We were talking about it looked like it was starting to turn around last week. We got a nice large-tailed candlestick, not a reversal signal last week, but we could count this week as being basically a piercing line. We opened up below the body of last week, closed halfway above the body of last week. Good piercing line. On a daily chart, what are we seeing? A good strong finish, what we considered a bullish engulfing, and we had prices finish above the 20-day moving average ever since last time it did that was back in June, just before it took its last big dump down to the inside. Strong moves up. We could consider this an up move, down move to a new swing low, and now a breakout to the upside. And I'll be looking for something to do with gold. So GLD, guys, a couple different ways you can trade this. I think a great way to trade this is just basically is to buy let's say a 114, a 115, or even a 116 call option that expires in October. That should give you plenty of room to ramble and run. In my reading on gold right now, the short interest on gold is at its highest level since the late 1990s, and every time it gets into a really high level, I mean, significantly high level of shorts oftentimes is a prerequisite for a turnaround and a bounce higher. And typically the bounce higher is somewhere between the 10 to 15% level. And I wanted to highlight that to you. If you took 10% from the lows of last week, run it up 10%, where does that take you? It takes us all the way up here to about the 122 level. There we go. Right there. 122.20-ish. So if I bought the 115 or 116 excuse me, call that expires in October, how long does it normally take to run? 10+%. Well, it takes usually 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7, 8, 9. So it's about 7 to 9 weeks for it to fulfill itself. And so I'll be looking for some kind of a pullback back into the midsection of Friday's candle or a retest of this downtrending line at the 8-day moving average for a rebound. So how do you do that? Basically, I would be buying the monthlies. October, excuse me just a second. Excuse me, I hope that got muted. I'm not sure it did or not. Anyway, the monthly October, again, like I said, it probably anywhere from the 115. And if you want then to basically we expect the move to be up to about approximately 122. That would make sense. That would still put it below the 200-day moving average. It would still be in a downtrend, even though we may pop and go all the way up to the 127, 128, 130 level. But you can turn around and sell the 125s. And even if you ran up to 125 between now and the third Friday in October, you would capture $10. You could probably buy this one here for about $1. The composite there would be about $1.50. What would that look like? Let's go over here real quick and just take a real quick peek. Okay, let's take a real quick peek here. Screen. Okay, I don't have up what I'm looking for, but I'll talk about that a little bit later. But that's one thing you can do. You could, and then you could probably buy that debit call spread for less than $2. And if it runs up to 122, you would be in the money considerably, which would be a good thing. There we go. And so then that brings us over to JDX. This will be the last one I'm going to cover today. JDX. Now this will be our bonus trade if it sets up. The gold miners are lagging the gold, lagging gold right now. Not abnormal. We get this could have been an exhaustion move to the downside, and basically clearing the way for a nice rebound. This weekly range here on GDX is about almost 5%. We have a bullish Harami on a weekly chart. Again, it is doing something similar to what we saw gold do, where we came down, made a new low, maybe a capitulation move, came back up, hit the moving average, pulled back down, higher low, and now I'd like to see a break and a close above the 8. That's probably telling us we're going to go from at least up to this level here, or this level, the 20 level. And what would that be approximately if we do move above? Well, at 20 months, there would be, oh, that's GDX. Let's take a look at this on, excuse me. JNEG, similar type situation. So if JNEG does the same thing and bounces back up here to about 950 from where it's at currently, well, 950 would be about 12%. But of course, if we get back up into moving averages, we're talking, a much larger amount. So if we get back down to where it actually broke out, say $10, well, you're looking at about 30% on JNEG. Good bullish Harami, as we've seen before. We do not quite have a reversal on the weekly TSI. So we do on the daily, but not on the weekly. Similar type position. So, okay, guys, that basically covers what I wanted to cover on entities to potentially trade for this week. There we go. And thanks a lot to Eric, who said basically when I was projecting my little video of myself while I was when I was showing the charts, it blocked out part of the charts that was important for everybody to know. So I stopped doing that. Just real quick, gold seasonality. We think we're sliding to the, we're over here in the August time frame. It has not totally reversed yet, but it's looking like it's going to. What else are we looking at? I'm looking at Russell. Again, Russell may get a little bit of a sprint higher in the late August into September, mid-September timeframe, but then it should get a pull back into the mid-October range. And remember, the Russell and the NASDAQ normally have a tendency to run more in the last 3 months of the year than the S&P. So real quick, hey, what is the best moving average? Well, which is best? I hear that a lot. Which is best? I want your indicators and all that kind of stuff. Which is really, that's flattering, but at the same time, my indicators, my moving average, I chose those for a specific reason, and so, which is the best? It depends. They're simple moving averages. They're a little bit slower than other moving averages. There's triangular moving average. These are a little bit slower than simples, believe it or not, but it really smooths out the curve. And then there's exponential. I tend to go with exponentials because it's a little bit quicker. But the series that I utilize, I basically go with primarily the 8, the 20, and the 50 period moving average. I carry those across all charts with the exception of the weekly chart, where I go to 8, the 20, and the 40 rather than the 50. Why the 40? The 40 because that emulates the 200-day moving average. Some people will go on fib numbers, the 5, the 21, the 34, the 55. Those are, and that give you a little clue, that's one of the reasons why I'm looking at the 34-day moving average that we're going to be doing some study on probably this, if not this week, this Wednesday after this session. So the basic deal is find out what works for you and then stick with it. I know some traders, they drive themselves, and that's they'll for one chart, for one entity, they'll find that a simple moving average works the best. And for another entity, they'll choose the exponential and move best. For some of them, you'll drive yourself nuts trying to find a moving average that fits all cases. So just choose one and then learn. The real skill comes from learning how to adapt and understand what that moving average is to tell you as it interacts with price action. So the moving averages, remember, they are basically clues to when price action changes or if it's maintaining a trend. Okay, as always, trade wisely, trade profitably. This is the bay in front of my son's apartment over here in Ulsan, Korea. And Typhoon Solik came through, and this was so choppy. This harbor was full of hundreds of ships. When we first got here, it went like a ghost town as the party got out to sea for the storm that came through. And this morning they come, traipsing back in. Again, we're leaving tomorrow which is Sunday here, it'll be Saturday there. I'll be arriving back in Hawaii on Sunday, where we'll get back to our regular broadcast on Fridays for the Making Money Trading Stocks, ETFs, and options. And, of course, our premium services that we provide our premium members. So with that, I want to say aloha, God bless everybody, and we'll see you next week.